Make Better Wealth Decisions, a podcast that explores how financial advisors' blind spots can harm your investments. I'm your host, John DeGuy, a portfolio manager with Design Securities in Toronto. In this podcast, we'll provide advice on how you can achieve better outcomes by maximizing investments and minimizing taxes. Let's put our thinking caps on as we consciously decide to get smarter about our money. Last week, we had the second half of our interview with Jeff Rubin, who is the former CIBC chief economist and author of the book, The Map of the New Normal, How Inflation, War, and Sanctions Will Change Your World Forever. In the previous section, we talked about how sanctions were having an impact on inflation and what it would do with your life. In the second half of the interview, we talked about geopolitics, what it means in terms of global alliances, what it means for security of supply, but also just political, military security, what it means for you as an investor living in a world where the Cold War, which was something that we all thought had passed us by and was no longer part of the real world, is coming back. It's making a comeback. A lot of people thought we were in a situation where things would be fantastic after the Berlin Wall fell in 1989. And then the Russian Republic, the Soviet Union fell apart to have the various member states gain their independence, and the Soviet Union imploded, became much smaller, and the main country being Russia after 1991. And we were looking at a world where people were talking about how there would be a peace dividend. Well, that peace dividend seems to have paid out in full, and there are probably no more peace dividends to be paid going forward as of 2024. One would argue that would be the case already going back to 2022 when Putin invaded Ukraine, but certainly after 2023 when Hamas engaged in its terrorist attacks in Israel, we're now in a situation where there are regional skirmishes that are A, breaking out, but B, threatening to expand to become more regional, and regional being, which is to say, taking on a bigger region and threatening to become global. And war is a very real possibility, and diplomacy is extremely delicate and extremely important in this environment. The first thing that we have to think about is interest rate hikes and how the hikes that have taken place in 2022 primarily have changed the prices of things. Doesn't matter what it is you're buying, inflation is higher, and as a result, goods and services cost more. But one of the points that Jeff makes is that it's becoming systemic, because as the expectation of further inflation becomes entrenched in the system, what happens is that the people in the Western world, in Canada and the US, but also throughout Western Europe and Australia and Japan, who are working and supplying goods and services for other people, allies in the West, are the ones who are now supplying these things. They're demanding higher wages because, first off, the things that they themselves would be buying are costing more. But they've seen how inflation has hurt people's lifestyles, and they want to get a piece of the action. So we're in a situation where not only have prices gone up because of monetary easing due to COVID, not only have prices gone up due to supply chain disruptions as a result of the COVID lockdowns, but now we're in a world post-COVID where we are now friendshoring, and friendshoring means paying more to get stuff, because that stuff that we're getting, the things that we're buying, are going to be produced by our friends and allies who simply want to charge more. And that means that we have to pay people more to produce those things. I don't know how many people have really thought about that. We've also had a discussion about climate change. And Jeff made a point that other people who are on this podcast have made previously as well, that it's a very real concern. And a lot of people haven't really thought about what's going on with regard to our climate in a meaningful way. I live in Toronto. I have seen massive flooding and storms come by as a result of climate change just in the past couple of weeks. Just got back from Alberta, where the town of Jasper was largely burned, and much of the surrounding area was also burned. And of course, there were problems with regard to the air quality and smoke and what have you. This coming on the heels of what happened in Lytton, British Columbia 2-3 years ago, rising sea levels, and the possibility of climate refugees. There are a whole bunch of things that we're just now getting the tip of the iceberg. And we have to come to the terms with the fact that we will almost certainly not reach our targets for decarbonization. and that the world will in fact get a lot hotter, and that there will be a lot more disruption. There will be more hurricanes and tornadoes and floods and droughts, and it'll be difficult to get food because we can't irrigate the farmland and so forth. So these are things that you need to think about with regard to your life in general and your portfolio in particular. Finally, one of the things that we talked about with Jeff was the fact that the US might be losing its position as the world currency, the reserve currency. This is something that they have had as a privileged position, which allows them to fund their debt at a more competitive rate all the way back since the Bretton Woods Agreement in the aftermath of the Second World War. That seems to be threatened right now. And to put it in perspective, the US accumulated national debt is currently officially at just under 35 trillion. That's a TR, $35 trillion. The debt to GDP ratio in the US is now higher than it has been at any time in peacetime in history. And that's only the tip of the iceberg. When you think about the $35 trillion number is just the published number. If you think about the implicit debts, the debts of paying for social assistance and social security and defense spending and other obligations, that number is about 4.5 times as high. There is just no way that number is sustainable. The US is adding almost $1 trillion of debt as a result of its spending more than it takes in every 6 months. So every 6 months or so, the US goes another $1 trillion further into debt. And as long as interest rates are high, it'll become almost impossible to pay it off because now the cost of carry, the interest on that accumulated debt, is becoming more expensive because interest rates are higher. We're in a situation right now where the US will almost certainly not be able to carry on indefinitely. Now, there are other countries that are in similar situations, and that's not really Schadenfreude. What is it's bad news for the whole world because it's going to be difficult for anyone to grow their economy when there's such an overhang. So this brings us back to the whole notion of thinking about your own portfolio, what it means, and perhaps lowering your expectation for rates of return because there will be drags on the return expectations as a result of the risk-free rate being where it is and the equity premium being lower than it has been historically. And as a result, the returns that you might be getting on things like stocks are likely to be a fair bit lower going forward than they have been in the past. Have you thought about that? Is your planning taking that into account? There are a few things that you can do when you are dealing with the world of lower returns. When it comes to retirement planning, you can save more. Lots of people don't want to do that. You can invest more aggressively. I would certainly not encourage you to do that. You can retire later. That's the one thing that people who are still working should probably be considering the most. And if you don't do any of those three things, your fourth option is to simply consign yourself to a lower quality of life in retirement than you had originally planned for. None of them are necessarily happy news, but it's important to make your decisions with your eyes wide open and thinking about the ramifications of what's to come. We'll talk to you soon.
John DeGuy is a portfolio manager with Design Securities in Toronto. The views expressed in this program are not to be construed as specific advice. It is recommended that you consult a qualified advisor before taking action. His books, The Professional Financial Advisor 4, Stand Up to the Financial Services Industry, and Bullshift are available through Amazon and in bookstores throughout Canada. You can reach John at 647-STAND-UP. That's 647-782-6387 or at jdeguy@designedsecurities.ca.